Hey guys, Gil Stokes here. I want to share a quick discussion from this morning's live trading room where we broke down the yen intervention situation, looking at both the technical and fundamental side of things. We talked about how more intervention could be right around the corner and even compared this current setup to the biggest crash in Forex history. Let's dive in. With that being said, we have a lot going on in the background. As always, we've got, quote, geopolitical tensions, war happening still. And then we've got this pesky yen intervention that we've been talking about all week. And I want to start with that because this is a very interesting situation from both the technical and the fundamental side of things. So just to catch you guys up, if you've been gone for a while, last Thursday, there was intervention by Japan on the yen. They've been talking and threatening and hinting at, hey, our currency is too weak, bad for imports. Let's make it not so weak. And eventually they came in and intervened. And you can see that on your chart if you look very closely at that 500 pip drop off. Now, as you spoke about yesterday, from a technical perspective, we saw something interesting. After that 500 pip drop off, right, price went from about 160 half to about 155 half, and then it bounced back up. And then it retraced down there and gave us a nice little double bottom, and then it bounced back up. And then we came in on Sunday, right, earlier this week, and we came back to that level, and then we bounced back up. And we said that the market was giving blatant clues that this level is being protected, that yeah, they're strengthening the yen, but they've only been able to strengthen it by a certain margin. And this was a clear and obvious, right? Clear and obvious, watching a lot of soccer lately, a clear and obvious level that the market showed it wanted to protect. Now, with that being said, it also wasn't able to push it to the upside until yesterday, where we had our trading opportunity here. And if you guys remember what we spoke about here on the dollar yen specifically, right? I said, hey, this is a good sign for bulls that we broke above this level. However, there's not that much room to go because if we look left and all the analysis is still on here, we're running into that inside level of structure. And I don't really expect price action to go past that inside level of structure. And what did price do? Price came right to that inside level of structure and boom, right back down again. Now, what is interesting is that what happened when we came down for that fourth time? Did we violate that level or did we hold at the same level we've held at before? We held once again. So again, more proof that this is a powerful level. Now, here's where things get interesting. This is when you get blatant clues like this, you can look at this two ways. One, you can look at this as being a clear area in which to buy. The market has proven to protect and respect this level. This is a clear level to look to buy, look to buy, look to buy. Obviously, if you get a reason for entry, I would highly suggest that you don't just put a aggressive limit order down there and buy right away, but you look for your normal trading opportunities, right? It just happens to be in that level. But there should also be a little bit of fear here. And I want to bring up another instance. I don't remember what year it was, but we'll see it on the charts. Do you guys remember the Swiss crash? Because sometimes the obvious level is not the greatest play. This one's a little bit different, and I'll talk about that later. But do you guys remember the Swiss crash? I'm going to load up a chart, and we can always, we'll go back, and it'll be pretty obvious. Let's go to Euro Swiss and let's go to the weekly. And again, this is one of the, it's cool to be able to talk about this in hindsight. Back when when I was trading this, it wasn't as fun. But I don't quite remember where it happened, but I think it was somewhere around here. When we had the Swiss crash. And pretty much this was another common sense level, right? So What happened was pretty much similar to like how the yen came out and said, hey, we don't want it going above 160, blah, 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 blah. The Swiss came out and they said, hey, we're pretty much going to protect 120, right? We're going to protect this 120 level. We are not going to let this currency drop below 120. And you can see as my line is right at 120, you can see we basically just held 120. Right? You guys see that? It was like an imaginary floor that price just sat above because traders knew that we had the backing of a central bank. Like, think about that. Like, think about your CTS score, right? If you're adding a CTS score up, what do we get? We get, all right, let's get 2 points for major structure on the CTS, right? Let's go through our CTS. We're going to get 2 points for major structure. We're going to get 1 point for Fibonacci confluence. We're going to get 1 point for double bottom. What else do we have here? Central bank backing. 500 points? Right? 500, and then 1 point for even handled number. 1 point for even handled number. So yeah, it was a traders were looking at this as easy pickings. They said, hey man, like a central bank, smart money is going to protect this level. I'm just going to buy every time it goes to 120 because I know that I have the backing. So it's similar to what we're seeing with the yen, but different, right? Now, the thing about this is there wasn't as great as a technical level, but we knew this was 100% fundamental. We knew that the only reason that this 120 was being protected was because the central bank came out and said it was going to be protected. And what happened with the crash is, I think Quan asked, one day they just came and said, we don't feel like doing it anymore. It was one of those type of deals where it was like, okay, we're done. We don't really feel like holding up anymore. And just pulled the carpet out and right, big old crash, right? So this situation on the yen is kind of similar to that, but different because this isn't necessarily this is going in the opposite direction of what Japan wants to do. Japan wants to strengthen their currency. So this would be the equivalent of the Swiss thing would be like selling at 160 every time it hit. In this case, Japan wants to strengthen its currency, and this is the market fighting back against that. This is the market saying, yeah, we don't really believe you because fundamentally there's nothing really out there that supports a strong yen. So it's a little bit of a different situation. I would say, even though more intervention has come and still can come technically, I think they have, I forgot how many windows they have left to do it. I'll look at that later. I think it's two more windows. They get 3 windows. I think they used 1. So here's a quick breakdown of the intervention windows. This reminds me of like soccer where you get 3 windows to substitute 5 people, right? So as we know, Japan's been stepping in and intervening with the yen. They've been supporting it, trying to make it stronger. And here's the catch. The IMF, which is the International Monetary Fund, says that you can only intervene 3 times within a 6-month window if you still want to be considered a quote-unquote free floating currency. Now, again, those 3 times, right, you can intervene, I guess, within a 3-day period, which counts as 1 window, and you have 3 of those 3-day periods within every 6 months, if that didn't confuse you already. Anyway, Japan has used 1, right? We saw that starting last week, which means they only have 2 left before November if they want to intervene again and stay within those guidelines. Now, here's the catch, right? What happens if they go over? Well, there's not really any consequence, right? They would technically be labeled a quote-unquote managed currency, which doesn't really look good for them, but the IMF really doesn't have any other way to enforce this stuff aggressively. So I suppose they technically could just keep doing it if they wanted to. There you go. That's a quick explainer that I hope didn't make things even more confusing for you before I started explaining them. All right, let's hop back in. But all signs were saying that the market doesn't believe them, right? Would you guys agree? They're trying to strengthen their currency and the market is fighting them back at this level. They've put a line in the sand that said, hey, we only think it can go to this level. And this is one of the reasons I thought we'd see a big correction. Now, Something else has been thrown into the equation, though, which makes this an interesting scenario. Because normally I would say, hey, like, again, you get a buying opportunity. And from a technical perspective, this is still true. Like, buy it up down here. Buy it up and trade it right back to the tops, right? And play this game each time. Every time it comes down here, buy it up. But we also had news come out this morning that said that we may be close to a end of the U.S.-Iran war. Did you guys see that at all? That they're working on a memo that may end the war? Yeah. And if you remember, I know we've been dealing with this for a while, but kind of the basics. Do I still have I don't think I still have the graph that I put up. Basically, think about the war like this. War being on does that mean stronger or weaker dollar? War on equals what? Stronger or weaker dollar? Which one? War on equals stronger dollar, right? Risk off, blah, 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 all that fun stuff. War being off means weaker dollar, right? No need to flock to the safe haven. There's also the case that when the war is off, the idea is that the U.S. is going to get back into its interest rate cutting cycle. I'll bring this over for you in a little bit. Here we go, right here, right? And if you're cutting interest rates, is that strong or is that good or bad for dollar as far as strength or weakness? Cutting interest rates would be what? Cutting interest rates would be weak. So you see how you have two things lining up. You have war being off, and then that means the market now focuses on interest rates, and war being off kind of gets us, or the thought is it gets us out of this, hey, like, let's hold and not do anything because of uncertainty, puts us in an interest rate potential hiking cycle, at least the market kind of starting to prepare for that. That means weak dollar. Weak dollar on the dollar yen specifically, does that mean market up or price goes up or price goes down? That means price down, right? So you see how the situation got a little bit more interesting just when we think we had the yen intervention play figured out, which I thought was a simple play because it showed that it wasn't going to work. They tried to do something and the market said, no, we don't believe you because you don't have the backing of anything fundamental. But now this timing may come at, again, if this war is going to be over, this timing may come at a very interesting shift where the yen may get its way by no fault of the yen, but simply because the opinion on the dollar has changed. Now, from a technical perspective, how does that matter for us? Well, same thing, right? We have a low, same thing we talked about the other day, right? We have a low right here. We can't look to get short until we break and close below this low. So it ends up being the same thing. If we break and close below this low, look to get short. That doesn't change. So like this is why we have rules as technical traders. We don't have to worry about all this fundamental stuff and think and guess and that. We follow what the charts say. But I did think this was a decent opportunity to kind of bring the fundamental side to the technical side and just kind of see just compare and contrast the different ideas. Hope you enjoyed the discussion. If you ever want to join us, feel free. We run both a New York and a London live trading room 3 times a week. They are also recorded each and every day. So if you can't make it live, you can always catch the recording or just review it if you're a super nerdy trader type. It is part of your 14-day risk-free trial membership. So just head over to www.tier1trading.com, sign up, get on the chat, talk to the community, hop in some live sessions, and learn to trade. And best of all, there's no sneaky salesmanship or anything like that. Once your 14 days are up, you just get the boot, or I guess you can't log in. Anyway, www.tier1trading.com. Look to see you guys in the live room.